What is one thing you would like everyone listening to take away from today's discussion?
Well, really let the data talk. Don't just listen to people because they are charming. They are loud. Really have them show you the data, the track record. Find the right advisor, not just based on the charm, the noise. Really find an advisor who is putting your interest at best. Ask them how much commission you get from that. Why will you suggest me that but not the other ones? Ask tough questions.
If you've ever wondered how real estate investors actually build their businesses, not just the wins, but the setbacks, the pivots, and the lessons in between, you're in the right place. Welcome to Let's Talk Real Estate Investing, where we have honest conversations about what works, what fails, and what you need to know before your next move. Hi, I'm Debbie Balfour, real estate investor and investor success coach. I help real estate investors fund their deals through a relationship-first approach by building a pipeline of qualified investors who are ready to say yes to your next opportunity. Each week, I sit down with investors and industry professionals to unpack their journeys, key turning points, and practical strategies that you can apply right away. So let's talk real estate investing.
What if building wealth isn't about choosing the right investment, but building the right mix of investments? Many investors focus on stocks or real estate, but there are many other opportunities that can complement a portfolio and help grow long-term wealth. Today on Let's Talk Real Estate Investing, we're exploring the world of alternate passive investments. We'll discuss what they are, why they're becoming more popular, and most importantly, how to evaluate them before investing your hard-earned money. Joining me today is Stacey Chan. She's a real estate investor with more than 20 years of investing experience. With a background in engineering entrepreneurship, Stacey brings an analytical, risk-conscious approach in real estate investing. As a real estate professional and licensed dealing representative with Enoch Wealth, she helps investors build diversified portfolios by combining real estate with opportunities such as private credit, infrastructure, private equity, and other income producing investments. If you've ever wondered whether there are investment opportunities beyond the traditional real estate, being a landlord or the stock market, this conversation you will not want to miss. Welcome, Stacey, to Let's Talk Real Estate Investing. It is so wonderful to have you here.
Thank you so much. This is a great summary. I'm very excited. Let's see what I can share with you.
So before we get into our topic today, could you give us a little summary of your journey in real estate investing?
My whole journey has actually come from my family side. They have been landlord back home in Asia. And they went for the bubble in 2008 at that time. And I see the crash, like what we are seeing right now, or maybe even worse. So when I first come to Canada over 4 years ago, first thing I come into is like, wow, the property here is cheap, right? And it's cash flowing. And to me, the cash flow is king. When I really look at investment, the reason people were in a crash and struggling because there's no cash flow. So when I first started investing, I make sure I buy cash flow properties. And that's how I started back, wow, over 20 years ago, right? And then
So you must have been a baby then.
No, I can't. Well, no, Asian just look young, but no. But I was in that kind of environment, right? In the teens, I was already submerged in those kind of investment when I was teen. Yeah, so just keep growing, keep buying and learning the landlord tenancy board, learning the refinance, the mortgages, all these strategies. And just that's how I build from buying duplex, triplex, fourplex, and now buying buildings. So it's this a learning curve along these years.
Excellent. So what was your why behind real estate investing? What really inspired you and kept you in this area of investing?
The ultimate why I think is I really want generational wealth. That's all I'm always pushing for is generational wealth. I see the privilege as an immigrant. Actually, people think it's a privilege. I think it's a privilege as immigrant back then. And I have the freedom to come for education, the freedom to build new life. So yeah, I just want my next generation to have that options for them. And that's what the why driving me. Like money is not the only thing, but without money is nothing.
Yes, but we have to have a purpose for that money.
It's generational wealth. They can get the freedom that they want or they don't want to do. They have the option.
You said something about teens. So how early did you start investing in real estate?
Well, I come here like I was only 18. But I don't know if that has to be my own money or my family's money.
It doesn't matter whose money you
When I
use.
come here,
right?
I help my mom, I help my
Yeah.
dad. We look for
Yeah.
properties, right? So I help
Right.
them like
Ex-
since I come. We need to
Wow.
find places to live, we have to do some business in Canada, look for commercial properties, look for rentals, and I just purchase myself.
And
But those are my
kind of a-
family background, right? Leading me to now I started even owning my property later on.
right.
But those are all experience.
Yes, definitely. And it's amazing that even at that young age, you were thinking in that direction. That you
Yeah.
had that mindset. You had that.
Yeah, because I see that growth in China. So when
Mhm.
I come here, I see, okay, that's an opportunity.
I think it's funny when you say that real estate is so cheap because we can't say that anymore.
Yeah, well, but it was over 20 years ago is what I saw. So and I see in 20 years, then you'll be okay. So I just keep accumulating. That's
Yes.
why when you see beyond, then you can act. But if you only see what's in front of you, then you cannot, right? I already have a plan.
Exactly.
I know what's going to be in 20 years. I have a long-term vision.
And I think that's the same thing. Like it doesn't matter where you are when you start. Because people will say now, oh, it's not a good time to get into real estate in this market. But you can't go back 20 years, and some weren't even born 20 years ago. You have to start where you are today. So what would you say to people who are saying, oh, it's not a good time to invest in real estate?
Well, it's always a good time. To me, it's not about the timing. It's about the deal. Even right now, today, the market is not good. Like you create a deal. Even the market is really good, but you overpay. My client, they overpay a property 10 years ago. 10 years later, or even 15 years later, even though we should be increased in 10 years, right? We just dropped in the last 5 years.
Yes.
They still losing money. So I don't think it's not really about the timing or whatever. I think it's really about, do you know how to analyze this is a good deal? It's like you buy a stock, you buy an overvalued stock, even though it's a very good company, but it's overvalued. So you still cannot earn money. So you have to be able to identify a good value investment. So even right now, just if you know how to identify, it's a good time. Even in the past, like why people still survive, but some people fail. Even when they buy in 2020, if they know how to buy, they still survive. Right? So
Yeah.
it's
exactly.
not really, I don't know if it's called really a timing, but more like it's your investment can survive the downturns.
Yeah. And this is the downturn. So anybody with money right now, it's a good time for them to buy.
Yeah,
So I
right?
wouldn't say it's not a good time to sell,
Yeah,
but it's definitely a good time to buy.
yeah.
So
Well, it all depends, right? Because I always say if you sell and you buy at the same time, it's not a problem. It's not really a problem. It's
yeah.
more like if you want to switch to better assets or not.
Right.
Better asset, right?
Mhm.
If you know after you sell it, you can buy a better asset, then sell it.
Right.
No big problem.
Yeah.
Yeah.
So you are also a realtor
Mm-hmm.
and you're an exempt market dealer, an
Yeah.
EMD.
Representative. Yeah.
So what inspired you to do that and how do you balance all of this?
Or I'm an investor. All the time I tell people I'm an investor. So it doesn't matter if you have a lot of license or whatever, if you don't know the fundamentals, just having the certificate doesn't help you. Right? You really need to have that experience, that knowledge. So I'm always an investor. As a realtor, I'm just transactioning your buying and selling. That's all. Right? Any realtor can do it, but my value is my background in investment that I can bring value to your sales. So same thing as exact market, because I'm more like a wealth builder. That's what I give my own title, is like a wealth builder. Can build generational wealth. It's not just real estate or just stock, mutual fund, just alternative investment or insurance policy. So having all this integrated together, and it just both attract me because they both can be analytically predicted. Buying a property, I can do cash flow analysis. Doing the private investment, unlike stock that gonna go up and down because of some news, the private market is actually more stable and more predictable. So both to me is actually the same. When I look at the REIT that I'm selling, I look at their loan to value, look at their leverage, look at their cash flow, look at their management. It's exactly the same how I analyze things, and I'm just transactioning. Again, I'm
Right.
just transactioning. To me, it's just all investment.
Tell me about your experience outside of real estate investing.
Yeah. So after all these years, I think for a lot of people, it's easier to start with a house because it's easier to get leverage. That's how you can expand. But once you accumulate some wealth, then you might want to start not dealing with tenant, not dealing with property manager or contractor. I mean, now I have nightmare everywhere. And when I really look at the numbers, maybe you get, let's say, average annualized 20% return. But as a landlord, I think lots of us know as a landlord, we have rent control, we have tenant issue, we have big capital expenditure, time, people turnover, management issue. For the extra 5%, is it worth your time? Once you get older, you realize it, the time is actually more valuable. And if you can quietly earning something, and I see lots of people, professionals, if they can quietly doing nothing because they don't know how to look for a house, like how to manage tenant. This is a different set of skill than their doctor, lawyer, accountant skills. They don't
You
have
don't
time.
have time either. They don't
They
have
don't
the
have
time to do
time.
it.
So why don't we just invest in something that gives you a little bit less, but completely hustle free,
Hmm.
and let it go and still do your professional job? There's no conflict because the time people don't calculate. The time that you manage the property, manage the people and the contractors, you could have get another job.
Definitely.
That is money. So we need to really put value into our time. And people don't see that. People don't
So,
see it.
with your 20 years of investing experience, you now help investors access the private market opportunity. So, what inspired your journey to do this?
Since university, I already do stock trading. So stock trading, mutual fund, private banking, and all these things, even option trading I tried. To me, I think it's really volatile. As an engineer, I don't think there's a logic in it. And it's like, let's say the Tesla, the SP ratio is like over 300, but some company was only 30. How do you say a SpaceX has like what, how many thousands of, I don't know. So what is the logic? It doesn't make money. I am more towards the Warren Buffett concept. The value, there's an evaluation for your business. Otherwise, it's just a story. It worth $1 billion and it worth $1 billion. And then one day you say, oh, it doesn't worth $1 billion, doesn't worth 1 million, and this doesn't worth anything. So I don't like that. That was my joining.
Mhm.
And then real estate, I think it's just so much time consumption and large capital expenditure. And to me, it's actually a big problem with that is the illiquidity and the cash flow. It's harder and harder to get cash flow, and it's very illiquid. Even if you refinance, like let's say the market drop, you cannot refinance. So it's very illiquid. So that's why I go towards the private market and actually find out the pension fund, biggest pension fund in Canada, they actually hold more private equity than their stock position. And you can see in the 10 years, it's just the public is not aware. But actually, they're more stable and actually get better return.
So, explain for viewers that do not understand the word private equity what you mean.
Private, it just means that you can invest in it and get a share of it, but yet this company is not in public yet. For example, SpaceX. Enoch Wealth was able to get the investor to invest in SpaceX almost 4 years ago. But now the people only get it now. And to me, this is already too late. So that's what we do. Like we invest early in the private. And lots of companies starting to stay private longer because that's where they don't have problem getting funding because of the internet. They don't have problem getting funding. They have less reporting that they need to do. So they have more control over their company. So by the time they actually want to liquidate, it's to get the initial investors' money is when they go to the public. So as
Right.
an investor, you want to be early. So I keep educating the client. 93% of the retail level trading stock lost money. 93%. So people, when the market go up, people buy. You see right now the problem in Korea. And everybody just keep buying because, wow, everybody's earning money. But when you hear that, it's already too late.
Right.
And then by the time that you bought it, it's starting to drop. And then you panic, oh no, and then you drop it. But they don't identify values. Those are a lot of time they're not really based on value, they're based on stories.
Right.
So they just pump and dump. That's why I like the private market. It doesn't have the market up and down volatility because they pay people to talk on the news.
So how is real estate included in that?
Yeah, so in the private market, they're just bigger scales, like REIT, real estate investment trust. For example, the one that we used to have is one of the biggest one in Canada, in the private REIT. They have over 23,000 units. So individual like me, I cannot buy 23,000 units. So how can we all pull in the money and give a reliable company to manage it? And they have an economic of scale to invest. And those kind of REIT is what we can offer to client. We have multifamily REIT, storage, farmland in US, in Canada. And the things I really like about what we can do is we are selling institutional grade. So you probably heard of a lot of people trying to raise fund, and those are much smaller deals. So that means it's risky. And I JV with people, they divorce, they have partnership issues, right? Management issue, they overexpand, or just one building didn't sell and then they all crash. So working with bigger institute, they have a pool, 23,000 unit. If they cannot, liquidate here, they liquidate there. When you're so small, you just don't have enough contingency fund. But for bigger institute, they can make a much bigger contingency fund. So it just, to me, it's a risk management. Go back to there. When you invest, you want to have as little risk as possible. And then even make mortgages. One of them, for example, we have Peak Hill Bridge Fund, Capital Direct, big companies, big pools, like almost like 3,000 loans. If you really want real estate, those are the things that we can offer to people.
Right.
But as one of the big EMD in Canada, Enoch Wealth, we have a diverse product. Because to me, I use private market to build a portfolio, not just invest in one project or two projects. It's to build a portfolio. So a lot of private market product, if you see outside, they start with $50,000. What we do, $10,000. And then we have so much product, so I can make a portfolio that really reduce your risk and diversify into real estate, into royalty, into energy, infrastructure, a hedge fund, AI, make it a more diverse portfolio.
Excellent. And the minimum investment is 10,000?
It depends on each product, right? But the
Right.
minimum is 10,000.
I was going to ask you that question and we organically went into it about how would you advise a client to manage risk? But as you just said, you work with them to diversify their portfolio, to
Yes.
select in different areas. So if one isn't doing well and
Yes.
you've got all these other asset classes.
And the other thing, as an investor myself, I think you probably go to those conferences yourself. They have a lot of booth. A lot of REITs go there to raise fund. I invested in those before. But what happened is, let me ask you, if the company is not doing well, will they tell you, my fund is not doing well, please take your money?
No, I have that trouble right now. I only found out about it when they sent me a notice from the Securities Commission.
Yeah.
And it's like, no, you can't get your money out. You're not getting paid. I haven't seen a statement for over a year and no communications outside of that securities
Yeah.
notice that I got.
Yeah. So as an investor, my own experience, what I like my company is we are third party. So we are third party, we screen the product, but of course it's not 100%. But after you buy the product, you still need to keep doing the due diligence. But as we buy it, we forgot about it. So having Enoch Wealth, the third party there, you are getting a third party audit every few months. So we actually have a few products that we actually pull out the investor a few years ago before they crash. So that's what I found is another level of risk management.
So you are doing that due diligence on a regular basis. So you can
Exactly.
let your client go, this is not looking good. Let's move your money.
So I think this is a different kind of strategy to help reduce the risk.
Yeah.
Yeah.
But
And
it's
there's
all
no
in the private market. I have my advisor and he does that with my stocks, but they're in the public
exactly.
market.
Yeah, not too much in the private market. That's why I
Mhm.
think my value, my rule is very important because I lost money before because people doesn't tell me. And that's why I think this is actually very important.
Mhm.
And having a very diverse product on shelf with very little minimum entry level, it's just much better way of reducing your overall risk.
Definitely. Yeah. I being still pretty new in real estate investing, I've been burnt enough because when I first started, I just went to people that, oh, they seemed really nice. They
Yeah.
seemed trustworthy.
Yes.
Everybody knew them. So
Yes.
I invested with them, and companies that were like supposed to have been preferred for certain groups
Yes.
that ended up being that preferred meant getting a kickback
Yes.
rather than that proper due diligence were done on it. And I
Yes.
just trusted it and I've
Yeah.
lost quite a bit.
It's just a lot of time I found that we just invest kind of blindly just based on trust, not based on data.
Yep. And now that I'm teaching this and I've learned the hard way, trust is not a word that you use just because somebody seems nice. Trust is
Exactly.
built over time with credibility and facts.
Exactly. Based on facts.
Yeah.
And that's what
Yeah.
I want. Yeah, exactly. That's kind of my go back to the why, like because of my experience, think we really people are lacking people to tell them the truth.
Hmm.
And I will wait up front and tell people, hey, you're not fit for this, it doesn't work for you. But some people they just want commission. But I will be upfront and even sometimes my client will be shocked that for some investment I actually got 0%. But and then they found out, wow, you build your trust through that. When people are working with you, then they know, then you get the referral.
I love that you can be honest with your client. This is
Yes.
not a good fit for you. This
Yes.
is a better fit. Having somebody that's able to speak honestly and be on your behalf, like really
Exactly.
thinking about you.
Yeah. The
And
best
because you're
interest
an
of the
investor
client.
yourself, you know what to look for. You know those red flags
Exactly.
and you know what it feels like to lose money because you.
Exactly. That's why I'm so passionate for what I'm doing and I really want to help people.
Oh, speaking of that, what are some of the biggest mistakes that you have seen or you're seeing that investors are making today?
I think just go back to that blindly trust.
That's the biggest one.
I see that's the biggest one. Even now, I have some people, wow, he owns like 100 units, but yet
Hmm.
he blindly invests with somebody because he's famous on his REIT. And now when I tell him about that, he's like, oh, so they, they still don't learn their lessons. I'm sometimes I feel it's good that I learn my lessons when I'm younger
Yes.
before later, so I will lose more money, right? So now,
Yes.
yes, I lose quite a bit of money, but if later on, I know some people right now they're retired and all their money is trapped. They
Yes.
lost $1
The
million.
closer you are to retirement, the less runway you have, the safer you need to make your investments.
Yeah. And he's not young either. That guy is not young, but it's
Mm.
still, I don't know, sometimes if you just never go through the cycle, I think, because I've been here for over 20 something years, right? In
Hmm.
Canada, people haven't have that real estate crash yet.
Yes.
But when I come 20 something years ago, there was already a crash in China where I was, Hong Kong, Macau. So I see that. So here they haven't felt until now. So now they feel the pain.
Yes.
So, but I still see people don't, he's still investing that. I'm like, okay,
So,
yeah.
what principles would you recommend people to follow to achieve long term wealth?
Principle, really look at the fundamental of the investment. For real estate, I will say cash flow. Don't over leverage. Don't over leverage. You might go slower, but I see people maybe go really fast for 10 years and then they go bankrupt. It's not
Hmm.
good. Really build something very, very strong that can last. Expand too fast, it might be dangerous. It's not good. So make sure your foundation is strong and strong fundamental. Really look at the value. Don't over leverage and try not to lose capital.
Yeah. And this gets back to what you were saying right at the beginning to look at the deal. And to be realistic with those numbers, I think a lot of people still invest with emotion,
Yes. Yeah.
right? So then they make the numbers work.
I mean,
What do
you
you
can,
think about that?
well, sometimes I do too, just because sometimes you cannot really count pennies.
Hmm.
Then you go nowhere. Analysis paralysis. So what you do is like a balance. Okay, if I'm okay to put a little bit stress here, but make sure you have some contingency fund in case that fail, you're not suffering here. That's why I'm doing the private market too, because I would see, okay, you have a lot in real estate, for example. I think you need to have some liquid asset. So that in case you never know there's black swan. What if the interest rate go 10%? What if you have really bad tenant? And then what? Get
Yes.
some liquid asset. This is called planning. Well, just like insurance, does it mean you will die tomorrow? No, but you still buy insurance.
Yes.
And unbelievable, I talked to some very experienced guy. I cannot convert them. They said, oh, real estate is amazing. I have no problem. Well, I cannot convince them. They're very strong in
All
what
their
they do.
eggs in one basket.
Yeah, then it's very dangerous until they know maybe there's a war and hit, then they lose everything. I'm trying to really educate people. You cannot put all eggs in one basket and cannot put all basket in one shelf.
Yeah, which, a lot of people are saying, well, I did diversify. I invested with this person and this person. I put a little bit here, a little bit, but it was all in real estate and it all
Yes.
came crashing down.
Yes, exactly. And even bonds and stock, they used to be uncorrelated, but now they are correlated. So that's why more and more institution pension fund, they're growing bigger and bigger in the private market. But what a lot of people are experiencing is the very unsafe private market. So what I'm trying to introduce is the institutional brand name, good big institute private market. So you really reduce your risk. Like stock, there's some very good stock. There's some very penny stock. Same thing in private market. Same thing. But for example, we have the largest infrastructure fund in the world, BlackRock Infrastructure Fund.
Yes.
Hamilton Lane. We have Morgan Stanley. We have Peak Hill. We have Franklin Templeton. Those you won't have access to. So you cannot really find this in other private company. A lot of private company, they are still very small. It's to reduce your risk and it's global. So it's not just Canada. It's more global.
Again, the market diversification
Exact
across
geographic.
across countries.
That's what I can really bring into the table for a lot of investors.
So for a investor today thinking about the private market, how do they start?
How do they start? Really, every people is different. I really always said each people is different. If they already have a lot of real estate,
Hmm.
but yet maybe they are struggling in cash flow or the tax efficiency of the investment return, because our investment can be a return of capital, so you don't need to pay tax right away. So you really, what I can do, because I am a business owner, I have a lot of rules. I was employee, I was employer, so I know where the gap can be for real estate, for stock, for being self-employed. What are you missing? And then identify where the gap is for you. For example, you need cash flow, or you actually have lots of money. You just want for fun. Then I might give you pre-IPO stuff like SpaceX,
Right.
right? So you have a lot of money in all the basket already. What you're missing is just very high return, high growth sector. But don't put all your money into that, but you at least get some into that category. So I have access to those. It really depends on where you are right now to say where you start.
Right.
Yeah, because the private market is not as liquid, right, in general.
Right.
So if you need liquidity, I might only tell you something that works for you. The shortest one we have is like 6 months. Mhm.
So what is the mindset shift that people need to make? What have you been running into where they've got these wrong beliefs and where you help them or you would love to help them to shift that mindset?
And lots of people, because they're mostly in the real estate group,
Mhm.
they just strongly believe in real estate. So I'm really trying to say I understand real estate a lot as well myself. And I see some problems. So I just want to make sure I tell them all these options so that they can find the best fit for them. Yeah.
Stacey, what's next for you? You've got your EMD, you've got your realtor, you're a real estate investor. What else are you doing?
That's it.
You're doing something with storage. So tell me a bit about that.
The storage is just one of our product, the REIT, storage
Mhm.
REIT. So we're just organizing to see because we want to be transparent. So you know what you buy in. This is the property is in the REIT. So I'm just providing a tool to the investor to investigate. So, a lot of people, they do JV, they do all this. They don't even see if they actually bought the property, the
Right.
partner. That's why there's so many scams. I fall into that too before. And they actually didn't buy the property. So with that, we just want to show you, hey, that's our brand. We own this property. This is how we want to get this property. What's the reason behind it? How much we get it for? We want to show the transparency to people. Yeah.
Storage is something that I'm actually quite excited about.
Mhm.
For most people, they think it's boring, but I think it's amazing because you don't have to worry about tenants and toilets.
Yes, yes. I'll tell you, it's based on numbers.
Yeah.
Storage has the most profit margins in all real estate category. Industrial, hospital, office, retail, residential. Among all this, storage has way bigger profit margin.
What's driving that?
What's that? Well, no much maintenance, no rent control, pay by credit card, so you can just lock the storage after 2 months they don't pay. Very low maintenance, and it's high demand. And people rarely move. Like people might find a job and then they just relocate and then they have to move. Storage, once you put your stuff there, even if you move the country, you might not even move the storage.
Right. Okay. So
It's like very long term and easy.
because you tend to put the stuff you hardly use into the storage.
I have 2 storage and I've been renting it for years and still like never see the guy show up paying me every month. It's crazy.
Excellent.
Yeah.
Wow. So,
Yeah.
Stacey, how can people get a hold of you?
Find me on Facebook, Stacey Chan, or wealth.builder.stacey@gmail.com.
You're
On
on
social media.
you're on Facebook
Instagram.
and you're on LinkedIn.
I'm on LinkedIn, on Facebook, on Instagram.
Well, thank you so much. I love this discussion. I have been actually speaking to a lot of people lately, just trying to show people that there are other ways to passively invest and promoting a lot of what you're saying. How can we diversify? How can we reduce risk? Because I've seen so many people over the
Yes.
last 2 years
Yes.
lose a lot of money, including
Yes.
myself.
Yes.
And so, what can we be doing? So, people are now very nervous about
Yes.
investing with others and
Yes.
they're being more careful,
Yes.
but they still don't know the fundamentals of
Yes.
how to be careful.
Yes. And the unfortunate thing is even the sales representative, they don't know too much about it. Just like you go to a bank, the
Mhm.
banker, they just get the certificate. They don't even own the investment. How can they explain to you what it is? Right? So how I'm different, I think I'm very different from a lot of people. I'm an investor myself. I know how to identify deals. I'm invested in it. I know the inside out of what's going on. So I think that's the really difference. I think the integrity of the advisor, very important. And if you're a good advisor, they should have told you all this. They
So,
should have told you.
what is one thing you would like everyone listening to take away from today's discussion?
I think really let the data talk. Don't just listen to people because they are charming. They are loud. Really have them show you the data, the track record. For example, the 2 REITs that we have, Avenue Living, the storage and the multifamily, they're actually the only private REITs that issue bonds. Very solid investment, and they are going public. So you really need to really know the data, find the right advisor, not just based on the charm, the noise. Really find an advisor who is putting your interest at best. Ask them how much commission you get from that. Why will you suggest me that but not the other ones? Right? Ask tough questions. Yeah.
Yeah. Don't be afraid to ask questions, to interview, not just jump in. Like you
Yes.
said, just because someone looks charming.
Yeah.
And
Yes.
we've all been there.
Yes, exactly. Yeah.
Excellent. Thank you so much, Stacey, for being part of Let's Talk Real Estate Investing. And for all those listening, if you enjoyed this podcast, please hit that like button and subscribe so that you can get notified when new podcast interviews have been released.